morning and welcome David Nangle, CEO at VEF. Very welcome to our studio.
Thank you for having me.
You are the CEO at VEF, and the very short description is that you invest in fintech companies in emerging markets. For those new to the company, how would you describe what you're doing at VEF?
Yeah, I think what we do at VEF is a reflection of me and my career. I am David Nangle, the CEO of VEF, and I've been with the company since inception, which is 10 years ago. We're 10 years old this summer, so it's a big milestone for me and the company. But I spent the last 25 years focusing on emerging markets and financial services. So through my previous career in research at big investment banks, working in Russia, East Europe, Middle East, parts of Africa and Latin America, I had a front row view of the evolution of financial services from old world branch banking to new world digital banking. And I guess back in 2015, I joined up with Per Brilliot here from BNB Global, and Per invited me in and we spun off and created VEF as a specific listed vehicle to play those strong fintech or distribution or disturbing evolution trends in financial services across scale growth emerging markets. So we saw the opportunity that was happening in digital banking, in payments, in credit, all of which was new world, evolutionary, and we saw the ability to take investor capital through the prism of our listed share and put it to work in these names. So we've been doing that successfully for 10 years, and we do that through the prism of VEF here in Sweden. Yeah.
I think you have a very interesting portfolio that differs a lot from a lot of our other holding companies that we have here in Sweden. Why have you decided upon this segment that you're currently working with?
Yeah, it is very unique, but the uniqueness of it does fit our skill set. And we love being skilled at what we do, love focusing on what we do. So we have a team that's very focused on scale emerging markets. So we're deep in a knowledge base and experience in markets like Brazil, India, Mexico, Turkey. Scale emerging markets, fast growth, deep underpenetrated markets which are digitizing very fast. And also in the evolution of financial services. It's all we have done in our careers over time, just keeping our finger on the pulse of the evolution of those financial services companies. And I guess you always see it firsthand here in Sweden. That's why I love being listed in Sweden, because it's a very knowledgeable base on what does fintech look like. And it looks like Klarna, it looks like iZettle, it looks like Trustly, it looks like Fort Knox. And we see these companies, variations of them in these markets over time. And we're putting investor capital to work through the prism of our company into these companies to make a return. So it fits our skill set. The market likes it with the capital they deploy, and we make a decent return for them.
Interesting. You mentioned some of the nations that you are currently involved in. Which market do you find especially interesting right now, given the local market climate and recent developments?
Yeah, we did a fresh review of our geographies recently, and we had our board meeting actually here in Stockholm yesterday, so we presented to our board. Because over 10 years of experience, we have invested historically in Russia, not anymore, it's a market of the past, and we made money for our investors. Turkey in payments, we've been heavy in Brazil, we're invested in Mexico, some of the frontier markets like Pakistan and Africa, we're quite deep in India. But when we re-underwrite the geographies of the world, the emerging growth world, which is the most exciting, most populous, youngest part of the world, digitizing faster than most, we come down to two key markets as a relative preference, and they are Brazil and India. They're two markets that, for some similar and some very different reasons, excite us most for our capital to be put to work to make a return on capital for our investors. I can get into both in different ways, but they're the ones that basically we spend maybe 70 to 80% of our time on.
Yeah, I see. India is, of course, is a very interesting market now, as it's growing very, very fast. However, I think now I at least want to focus on your legacy in Brazil, which is quite large. You mentioned it briefly, but why do you think there is such a great opportunity there?
So different markets are exciting for different reasons for our investment dollar for fintech, but I think with Brazil it starts first and foremost with population and size, and it's the top 5 country in the world in terms of population with north of 200 million people. So we like a good scale market. It's very well financially penetrated, which means individuals on the ground in Brazil understand financial services. The deposits, loans, payments. In many emerging markets, you are educating them, but in Brazil, very financially literate. Then you have a great ecosystem of founders coming through, a bit like Sweden, where there's a lot of founders and a lot of capital supporting those founders, which is great for business building at an early stage. We tend to follow that capital. Then you have a regulator who is super supportive. You don't always get this in emerging markets, but a regulator that supports fintech as an area to basically scale and disrupt the financial system and make it better, bring competition, bring down pricing, reach the masses that are underbanked. So, and then you got an exit ecosystem where it's great to make an investment. It's even better to exit in investments. Recently we sold Gringo, an auto app in Brazil. So we like to exit with the capital that we have. So there's many different points in there, and we started to put capital to work in Brazil back in 2016, 2017, and we've been putting capital to work through cycle. Our biggest asset there is Creditas, but we've got a number of assets in that market. It's been very good for us and our capital, and we keep on going back.
You mentioned Creditas, which of course is based in Brazil. This is VEF's currently largest holding, and we have seen announced plans for an IPO. And what can you tell us about Creditas?
Okay, so at a very high level, what does Creditas do? It provides credit loans to individuals. No rocket science there, but it provides those loans secured against people's home, people's car, people's payroll. So it's a secured lender, fully digital and no branch base. Everything is done through the smartphone or online. It's quite unique in Brazil because the banks in Brazil really focus on unsecured lending, high rate loans. Creditas has stepped into the market to disrupt what is a $500 billion market by bringing collateral into the equation and doing it in a digital manner. A very efficient, quick underwriting where you can underwrite the person and their collateral and give them a cheaper, better loan suiting their needs. So Creditas today has a loan book north of $1 billion. We're starting to reignite growth again. The originations grew north of 40% last year. That's starting to feed through to the loan book, starting to feed through to the income statement. It's now delivering profitable growth, as opposed to in the past when it was growing super fast and burning, and it slowed down to get to profitability, and now we've got profitable growth. And that's important because what you say about an IPO. When you're coming towards IPO like a Klarna, like other names, you need to have everything in place. So Creditas is on a path towards IPO. It's getting itself ready. The business is looking good. I guess the question around Creditas and its IPO and its exit is more one for the markets. When is the market ready for IPOs? The market is on off in terms of IPOs these days. And
we'll get into that just shortly.
Yes. So it's more, I'm very happy where Creditas is in its business, the team, the growth, the trajectory, and then the markets will tell us when we IPO.
Yeah, okay, sure. Fair enough. You mentioned the exit climate that is, well, a prerequisite really for doing the type of business that you are doing. Looking at your portfolio, we note that VEF has recently had 3 exits, BlackBuck, Gringo, and JustPay.
Correct.
Why and what does this mean for your portfolio?
Yeah, look, I think they're very important events. Investing isn't easy, but it's a lot easier than exiting. Investment companies, you see a lot more investments than you do exits. That's just par for the course. We've been very focused on exits over the last 12 to 18 months. We've been telling investors that to do 3 exits in what everybody understands is a very difficult environment, one via an IPO, that's BlackBuck in India, one via a trade sale, that's Gringo in Brazil, and one via a secondary sale of shares. We've done 3 different companies, 3 different means of exiting, and the final one, JustPay, was one of those kind of benchmark exits where we did nearly 40% IRR on the capital that we put in, and we still own a big stake in the company. So what this means for us is that we were very much focused on getting capital in at our NAV mark. So the capital that came in, we're now sitting on $45 million of cash and liquidity from about $12 million at year end. That money came in at NAV. Now we trade at a discount to NAV, and what we're telling the market consistently is our NAV is true and fair. So when you exit companies at that and you get real dollar cash or real SEK cash in at those levels, you're telling the market your NAV is real. Also then with cash on balance sheet, you've got options. You've got options, and we look left at our debt, we look center at our equity, we look right at pipeline. 3 different options in which to put capital to work. And we're starting to put that capital to work. in the most logical, efficient manner possible. A, pay down our debt, we've announced that to the market, and B, buy back our shares, or as we like to see it, as investing in our own portfolio companies at a discount to NAV, which is, we'll do that all day.
I think we've seen that a lot of these, well, as the market might tell us, more riskier investment companies that are currently trading with a large discount on their NAV. What is your view on the share buyback program that you've recently announced?
Yeah, so look, the perception of the market of investment companies, I understand where the market comes from, because in the years up to 2021, everything was like this, and people got a little bit carried away.
Yep.
People looked at us in our portfolio and said, everything's a unicorn.
Yep.
And everything's not a unicorn. Then 2022 came and they said, everything's worth zero. No, everything's not worth zero. The truth is always somewhere in between.
Yeah.
What we've tried to do is stay true and fair to NAV, stay true and fair to valuation, and keep on communicating, and do the right thing. And we know over time the share price will be true and fair versus your NAV, and that's just life.
Yeah.
In the moment it is what it is, but over time. So when we get excess cash on balance sheet like now, and the market wants to be inefficient with our share price, we buy back our shares. We create value for our shareholders who are loyal, who are with us. The new shareholders are coming in. We buy back our shares, we cancel those shares, we create NAV per share. It also shows that we're putting our money where our mouth is. We believe. You know, if we didn't believe, we wouldn't be doing it. I think it's the most obvious thing to do right now. And as we create value for our shareholders, as that share price, as it has started to do, starts to tick up, gets closer to NAV, we stop.
Yeah. Fair enough. You addressed this kind of short-term volatility that we've seen, and increased uncertainty over the last few months. This is, of course, reflected in the withdrawn Klarna IPO.
Yep.
How is VEF responding to this increased geopolitical and macroeconomic volatility?
Yeah. So I've had a number of interviews recently where a similar question has been asked.
Yeah.
And if you're talking if you're talking to a developed market investor, it's a new world. Yeah. If you're talking to an emerging market investor, it's the same world. We live in macro, political, geopolitical uncertainty.
Okay.
We invest in Mexico, Brazil, India. It's our day by day. We're investing in great companies, in great founders who build, you know, amazing companies like Nubank, like Mercado Libre, through all the volatility, through, you know, the right-wing government going to left-wing government, volatility geopolitically, macro swings of GDP plus 5%, then minus 5%. You know, you don't like them, but that's the day-to-day for our founders, for our companies, and for our capital. So, you know, in this recent window of volatility at a, let's call it, political level, with the US-induced tariffs on the world and all the reactions therein, you know, it's another day at the office for us. We get that, but we've got to be very aware. We've got to be very cognizant of the countries that we're exposed to, where we might put our capital to work, and on a relative basis, we're not in China. We're not in Russia. We're heavy in India, large domestic economy, very well positioned in this environment. We're in Brazil, which is an export nation, which is benefiting from some of the US exports falling off, and Brazil exports everything across the world. So some of the bigger, deep markets that we're in relatively are doing quite well. And then you talk about the exit environment, which is a byproduct of that volatility, or the lack of forecastability of exits. You mentioned Klarna, I mentioned Creditas. You just can't put a date on these things. Yeah. It's a when, not if. And when the market settles, these things will happen. The main thing for the Klarna shareholders, or us, for the Creditas shareholders, and you're in the right company. You're in the right company with the right trends, and then when the markets settle, IPOs can happen. And then we all, in the investment company world and in venture capital and private equity world, we want exit markets to open up because it's good for business. But I think at VEF, what we've proven in the last 6 months with 3 exits, you can do exits. They're just easier and harder environments to do them in.
I see. There is a lot of talk, of course, and speculation about where the tariff eventually will end up, at what level.
Yeah.
Looking at your underlying portfolio, is there any of your companies that are more or less exposed towards this sort of threat?
Not directly. You know, I think the whole world indirectly is exposed. But you start at a macro level. I think some of the countries that were most hit, obviously China and the US are having a good go at each other in terms of tariffs, and we'll see where that ends. It seems to be going better. That's good for the world. Some of the Southeast Asian nations like, Vietnam were front and center, Cambodia in the direction of travel. We're not exposed. Obviously there's geopolitics in the Middle East and Ukraine, Russia, we're not exposed. So Brazil has been one of the least impacted nations. India also, these are important nations on a relative basis for the US. Mexico has got a lot of press, Mexico, Canada, either side of the US, but I'm very happy with how the relatively new president of Mexico, Sheinbaum, has handled Trump and handled the US. I think she's played a great game there. So, and Mexico is integral for the supply chains of the US, as much as the US makes a lot of noise about tariffs. So Mexico, of our bigger markets, is probably the one that's most susceptible to anything that happens in the US. But it's more a risk, I think, around the US recession and implications for Mexico than it is around tariffs.
Fair enough. Okay, so we're just about to round up here. How do you think VEF is positioning itself to benefit from these, medium to long-term fintech trends that you see in the emerging markets?
Yeah, so we stay close to trends on the ground. So we continue to educate ourselves on where the future is going in financial services at a global level. There's key trends coming through, whether it's generative AI, and we're seeing that through the prism of all of our companies using AI on the cost front, on the efficiency front, on the customer service front, on the collections. We're seeing a lot of savings, a lot of efficiency gains. So AI is a key aspect for our companies and for future investments. If companies aren't taking us seriously, we're not taking them seriously. Then there's areas around cryptocurrencies and the blockchain, which can be a fad on the cryptocurrency side, hot, cold, hot, cold. Yeah. But on the blockchain and the stablecoin side, in terms of cross-border payments and the future of money, this is becoming very real. So we've got our finger on the pulse of that. And then on a specific country level, we travel consistently. The team in the last 3 months has been in India and Brazil. I personally have gone a little bit further afield. I've been in Pakistan and Uzbekistan. If you're close to the trends on the ground in these countries, you see what's coming next before other people, and you can put investor capital to work ahead and make good returns. Yeah,
I think that will be the final question here. What do you see around the corner for VEF, and are there any trends to follow?
I think you have the short term and the long term. I think we want to give our investors a very strong 2025, and the short term there has been deliver the exits, get the capital in, put it to work on delevering the balance sheet and buying back our shares. That in turn should deliver a good share price return this year, very short term. Then we get to the point where we're debt free, we've got a healthier share price, and we're very close on pipeline. We've got 2 or 3 names that we're tracking, we're very close to in our key markets. We look forward to bringing our next investments to investors and saying this is our first investment since, I think it's 2021, 22. Okay. And that will be very exciting, because I think in the 10-year journey we've had so far, it feels like this is like VEF 2.0. It almost feels like we're starting again, but from a place of 10 years experience, a very healthy portfolio, lots of milestones in the past, and a very bright future.
Yeah, great. How exciting. Thank you so much, Dave, for meeting us here.
Super, thank you.